All right, Evan, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you guys have not done so already, don't forget to give the video a thumbs up, like, comment, subscribe to the channel, and come find Jason on Patreon, as well as me on carnivoretrades.com for swing trading alerts analysis and live day trading. Let's get into it here this week. So the markets this week, a lot of news to cover. We're going into a Fed week next week, and that will be all important as the market has now finally broken out of this range. And we talked about this. I talked about it extensively for a while, pretty much going back to like late July, which I said it would be a very tough task to get through 6,500, excuse me. And I don't see us going too much past that. Well, we are about 100 points past it now, which is about, 1.5% or so. It's not a huge amount. But nonetheless, the market is trying to break out here into or ahead of the FOMC. And there's a couple of things going on this week, namely, a few just really crazy headlines here. One of them being Oracle, and you can see this week a massive move here, up over 40% after earnings, and they double missed on earnings too. But it was their pretty much nothing short of crazy projections over the next couple of years here. And you can see they're basically projecting that they're going to 70x their revenue into 2030. If you want to buy into that, you're more than welcome to. I'm just here to report what happened. But and this is not a mid cap small company. This is Oracle, right? Almost a $300 billion company. Up 40% in one session. Now it has sold off since then. Larry Ellison actually passing Elon Musk as the richest man in the world. I don't know if he still is now that Oracle's come in, but just total, we're just seeing insane moves here lately with this market. Even Broadcom with a big move last week, just getting another free like 10% the other day on the back of that. We're seeing a market that is really kind of to me, I would say it's close to like a blow off mode. And I'm still going to say that there is definitely, I know a lot of people are starting to flip bull and call for, 7,000 and all these other numbers. But going into the Fed here, we're pumping pretty hard. And to me, I know that NASDAQ did make a new high today, but the fact that it took so long, this is basically a month to the day here. Whereas you have the other indexes, S&P, Russell, and the Dow all taking out that high from I believe it was the 13th, 13th August, weeks and weeks ago. I say this because typically the market likes to top out with the NASDAQ topping first, maybe making a slight nominal high, and the other indexes, seeing a big bread thrust and seeing these other indexes play catch up at the end. Similar to what we saw in late Feb. Spiders actually were making new highs, right? We've seen this time and time again. July of last year, SPX making a new high, Qs with the lower high, and it happened, a year before as well. So this is nothing new here. So I'm definitely very guarded here. Is the market just kind of in vertical mode? I mean, even the Qs themselves up. That's 8 days in a row here, and we're going into the Fed, right? So it seems to me the market is pricing this for perfection. And if we get any, sense of hawkishness now, 25 basis points is baked into the cake. We're not getting 50, but what could change things are obviously like the guidance, what Powell says from there on out. We also have, like TLT here. This is pumping up too, this whole week really. It's down a little bit today, and gold as well. It's had a very nice run here. We'll talk a little bit about silver in a little bit as far as LBMA shortages, but I think we're starting to see kind of like a culmination of this particular trade over the last month or two, and it may be coming to a head next week. But nonetheless, market is still, trend is up. We're above all the moving averages. We're still going higher. So, the benefit of the doubt has to be given to the bulls until proven otherwise. But I do see personally, for me, quite a bit of risk up here. Additionally, you have CTA positioning now maxed out here. And that is, an indication that, the momentum here is kind of, all in, right? There's not much here to chase left. So I would just say be careful. There's still, going into the next couple of weeks into options X into end of quarter. Yes, price is above 6,500, but I have not seen dealers change their position. And that means that I think when some of this gamma starts to roll off next week, we could see a very quick, corrective move. I know it seems insane, but that's, and by corrective move, I don't mean 2 days, like we've had one or two times here. I mean like an actual corrective move. But right now, market is running away here, and it can go a lot higher before it goes lower. But the higher it goes, usually the harder it falls. So 6,600 is your next kind of challenge right now, and there's going to be a pretty good call wall there. We could actually top out in this area. There's a lot of talk about the this the quadruple six number. Remember so that would only be 60, 70 points away from here, and that's actually what we bottomed at in 2008. So nonetheless, market's holding up. I see a lot of red flags though, personally. So that's all I'll say about that. Outside of that, again, to go to the Qs here, next little level is about 590. So that's a mathematical level there, and we could get there next week on the Fed easily. IWM has it has outperformed lately. Today it's on the weaker side. Actually, earlier this week it underperformed just a little bit, but had a nice day yesterday, and it hit our 240 target. So we've been looking for that for a long time, and that has finally been achieved. Your next is obviously your previous all-time high at 245. Dow, we've been talking about this bull inside pattern, and it broke out yesterday. So a little pause here today, so no real problems. There's another trend line here I'm watching if this does continue to just blow off up to 470. So somewhere in that area. We'll see if that ends up happening. It might not. The Dow is a little bit fickle because it is price cap weighted. Even the Dow pushing up here. SMH, new weekly all-time closing high. Although at the same time, even with Broadcom as much as it is, I think this would be even up more, and it's really not. A lot of money coming out of Nvidia here. It has not made a high in pretty much a month. So it has, it has gotten a nice rebound here from last week or so, but still no new highs there, and that is a it's the largest stock in the market, has a big weighting. We had IGV obviously up thanks to Oracle for the most part, and that did get close to new all-time highs. Didn't quite make it though. I think we got a close. Yeah, it's not gonna get there today, but close to it's a second highest weekly all-time closing high for IGV, and weekly trend again still up. Right, never really broke that, even though it was underperforming for a while. It did hold up pretty well on the weekly time frame. Got the transports here backed into this trend line again, and I mean this is your line in the sand, right? If this breaks, that kind of just negates this whole kind of bull impulse up move. But right now it's holding up. It's got a big fat reversal bar that price is inside of, so be aware of that. And you have lower highs here again. Another, just to go over red flags. I mean, lower highs in the transports versus higher highs in the stock market. That said, the chart itself, no real problems with it. But just from an overall perspective, something to be careful for and consider. All right. Interest rates today, a little bit of a bounce here on the 2-year. They've had a small up week. What I'm really watching is the 10s and the 30s right now. We had a bounce here at the 4% psychological level. So we hit that yesterday, just touched it, and we're getting a bounce here. Again, I think rates, flip to the inverse to say TLT, for instance, I do think this is a nice bull impulse on TLT, especially given that it gapped above the 200 moving average. There we got to unadjust it for dividends there, but you can see that. That said, I can't advocate getting long here. In fact, if anything, I think if we get a little bit more of a flush out in yields, there might be a little bounce play next week on the Fed. It just seems like this market wants to pump, and the trade that's been working, which is long bonds, long stocks, long gold, I think that's going to maintain the case into the Fed, and we'll see if it ends up being a sell buy the rumor, sell the news type deal, because it certainly feels that way. But yeah, through 4% 10s, Notice how this trend line here, that big master trend line, coincides with that previous low right here at about we'll call it 385 to 390. So that would be an interesting spot there on the 10-year. XHB had a decent week, although it is red, but it pulled back and it held the moving averages. So again, I think XHB will go to new highs. I just don't know if it's going to do it right now. But XHB acting well. IYR firmed up pretty nicely yesterday. A little pause there today. And yeah, that's acted a lot better here. It looks good on the weekly. So I got shaken out of this for like a small gain a couple of times. But this might be setting up here for another push here. XHB and IYR tend to take turns sometimes too. All right, financials, we talked about that reversal last week. That was a red flag. It did pop back up, still has not closed above it. And you still, to be fair, the trend is up, but we are still inside of that red. So XLF a little softer here. KRE looks like it wants to have one more push though. So I would say as long as KRE is holding up, we'll give banks the benefit of the doubt. This is the more risk-laden bank ETF, right? Because they're smaller, they're regional. But yeah, it's holding trend and it looks like it wants to get one more push here. So KRE looking okay. Broker dealers never triggered the head and shoulders. We'll leave the trend line there just for fun. And it's just off all-time highs. I believe Robinhood I don't know if it was this week or last week. I think it was last week. They got included in the S&P. Yep. So there's the Monday push there. But anyway, oil, interesting stuff here. A lot of geopolitical news coming out. There's a lot of stuff going on with Israel. I believe there was talk with Trump and sanctions with Russia that would be part of the peace deal. Anyway, oil got a spike. It hit 64. We've been talking about that as the big level here in the near term, and it backed off. So if it gets through 64, it can squeeze. But I just don't have any, I'll tell you, if it gets through 64, it'll squeeze. I just don't know if it's going to. This pattern's not good enough to give me a probable scenario to say yes or no. I will say though, I know 60 is support, but given how much we've consolidated here and given how much there's lower highs, I would not want to buy that at this point if it got there. Unless you did some sort of spike down and then it squeezed back through, but I would not bid that outright at all. That said, oil stocks are holding up pretty well. XLE now basically all but confirming a higher low here. So this is why I like charts too, because even though you trade through these wedge patterns, sometimes the trend lines still respect, and it's respecting right now. So higher low there. And yeah, it's all but achieved a higher high. We got the XOP, same thing. It's actually going to be able to, looks like it's going to hold the 200 daily by the end of the week. And this weekly pattern here, let me get rid of all these lines. Just get rid of this. To clean it up, it's not a bad bull pattern. It's chewing through all this supply here that we're trapped buyers. If it can push through these moving averages, it's got a chance to really repair. And the other one that impresses me too is OIH. It's not going to get that weekly close above 260, but it's pretty close. And it's doing the same thing. Now, if it gets rejected here, it gets rejected, but it has outperformed a little bit lately. So energy stocks, got to remember, they're heavily correlated to the price of oil, but not always. Again, with the dollar, I talked about TLT, talked about this kind of, I don't want to say pair trade, but this sort of long bonds, short dollar, long gold type deal, long stocks. The dollar, a very tight range here, by the way, but the pressure is to the downside. And again, I have to think that it's probably going to try and spike down on the Fed, and we'll see. There could be a squeeze here if too many shorts get in this. I know the chart's weak. There's nothing really good for it, but this whole setup here just really, to me, in stocks and TLT and gold, really reeks of a buy the rumor, sell the news setup. So be careful with the dollar here. I'm not playing it personally, but those are my thoughts. Anyway, gold here, kind of a sideways week. So it had a little pop Monday, and then it's just kind of flagging right now. It did have a little reversal on Tuesday, a little uptick in volume there, so just be aware of that. That said, the miners, look at this. GDX, new all-time highs. You guys have been waiting a long time for this, haven't you? So new all-time highs there. SIL, we talked about the monthly breakout about 55, and that's continuing up here right now. So that is that's a positive for the spot metal, right, when the miners are leading. That said, I'm just gonna be, just gonna tell you to be cautious, right? We are parabolic now. We're parabolic. Uh, like if we look at a GDX, just for instance, like an RSI here, it's really hot. Not that that necessarily means anything. It can go more overbought, but it's hot. And again, you're going to the Fed. This was at $50 a month ago. It's at 70 now. Like First Majestic Silver was at, back in May, it was at 550. It's at 1050. There's plenty of other, instances of this. I mean, even GDXJ, it's $50 to 90. It's up almost 100%, in less than a year. And even just a month ago, 65, right? They're vertical here. And we're going into a Fed announcement of rate cut that everybody knows about. So you're not gaining any alpha by buying up here. That said, we might see a little bit more squeezing here in silver. LBMA now, lease rates have spiked again, and these types of things can cause wild moves, especially I've seen them before in silver. But again, just be aware, like we are up a lot here. That said, we touched $43 last night in the overnight. The last time we were at $43 was right before the high in April, like literally like days before the high. But what is different this time? This is the positive. You were already parabolic for like almost like 9 months by the time it got to 43 last time. It's just broken out recently, right? So you had a nice base here, then you had another kind of base, right? Look at the weekly. That's nice. So it's much healthier this time. But it is still up a lot into that. So just keep that in mind. I just don't want anybody chasing into a known volatility event. Platinum here still holding up. Yeah, up $8. And yeah, as long as it can hold 14, it's fine. Careful of a lower high though. Palladium, nice move. It got above our levels. We talked about 1200. It shot right through that. But this may have in fact, I bet you there's a 618. Yep, look at that. So you can just eyeball it sometimes. Right into a 618, so that may need to stall out a little bit. And then copper is continuing to be uneventful here. But it did get back above 463. But nothing doing there. It's on the quiet side still. Lastly, we got Bitcoin and ETH moving right now, actually. Ethereum finally starting to curl up here. I mean, this took a long time, but it finally started, and yeah, good pop. So we'll see that bull inside bar can play out now. I'm trying to get this set up for you. 4670 is your next level. That's a 618. And it also coincides over so we can see it easier. See how it coincides with this prior breakdown and then these pivots here. So that's your next big, I mean, it's basically there now. So, but either way, you get the idea. So maybe a little bit of an area to stall out, but nice rebound finally. And Bitcoin, holding up well. I think last week we were, so this was Monday. Yeah, last week it was a little soft, remember, going to the weekend? But it firmed up nicely this week. 116.5 is still resistance here, which maybe kind of coincides with that level I just showed you on Ethereum. So anyway, market's holding up right now. Got a little bit of time to the close into the afternoon, but we're just sitting beneath 6,600, and maybe they make a run at it at the end of the day. I don't think it really matters at this point. The volatility will likely die down Monday and Tuesday as we get ready for the Fed, but just be careful here. A lot of euphoria going on, a lot of wild moves, and a lot of things you see just wacky market wackiness here. Things that you see close to a high, typically, and again, just this. You're going into a known volatility event. Everything is known that what the Fed is going to do as far as policy. So just be aware of that heading into it. Anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to come find Jason on Patreon. Come find me on carnivaltrades.com. I'll see you guys all next week.